Hello and welcome to the Grace Shaw channel. And today we're going to be talking about consumer equilibrium. You ask, what is consumer equilibrium? It means the state of maximum satisfaction, a satisfaction where a consumer spends his given income producing one or more goods so that he can get maximum satisfaction and has no urge to change this level of consumption, given the prices of these goods. This is known as consumer's equilibrium. So let's look at that and what all that means. So here, let's take a look at a nice graph. And you should be familiar with previous ones about your budget line. And right here, we have the budget line, and we have points outside that budget line, B and D, and those would be items that it would exceed our budget. And C, at point C, this would be a point where we are not getting our maximum satisfaction because we are not spending all of our budgeted money on goods. So that leaves us to point A. And that falls directly on the budget line. So we are spending our maximum money that we have budgeted. And so that would give us the state of maximum satisfaction, also called consumer equilibrium. It can also be viewed as the price of A over the price of B, which is equal to the marginal units of A over the marginal units of B. So let's take a look to see what happens if a price changes on one of those goods. So let's just take a look at our original budget line is from E to D. So if our budget line moved to E to F, this shows that the price decreased on good B, which allowed us to purchase more of those goods. And then if we have a new line, let's say on the other side of E and D, and we'll call that one E and G, a new budget line, this would show that the price increased on good B. So that had us be purchasing less of B. And so all you are seeing here is a price of one good changing. And so you see up here at E, the price is fixed because the point is fixed for all three of these lines because we never changed the price at all on good A. So it stayed the same. So the only thing that changed is the prices on good B, which made our quantities consumed go up or down only on good B. So let's look at some types of goods. Right now, let's just call all goods either normal or inferior. So if our income increased, our consumption of a normal good would increase as well. And vice versa, if our income decreased, our consumption would decrease as well for a normal good. But let's see if a good is inferior. Our income increases, so our consumption of that one would decrease because we are going to prefer more normal goods than inferior goods. But if our income decreased, the consumption of inferior goods would increase, meaning we didn't have enough money to buy those normal goods, so we are having to buy more inferior goods. Look at how income is seen on a graph. So here's a nice graph to look at, and welcome to go back and compare it to the price change index. And this is actually just looking at income only. So again, we have a baseline here at KJ, which is the closest one to 0 there with a point A. So if our whole income changed, giving us a new line from G to F, that looks like the whole line shifted outwards. So we are buying more quantities of good A as well as more quantities of B. But let's take a look at another scenario. On line ED, our income increased, so the goods are going to increase on both quantities of goods A's and B's. But by looking at this chart, you see that between E and G is more narrow than F and D. So we can come to the conclusion that when this income increased, one of the goods was inferior. So the quantity of the inferior good is decreased. In this case, that would be A, because it has a smaller increase there between E and G than F and D. So good B there would be more of a normal good, and good A would be an inferior good in this graph. So now that we've looked at a few of these, this is a nice little recap of just looking at one line. So at point A, the consumer is said to be at what point on this? It would be considered the equilibrium. The consumer is in equilibrium or the optimal point, because you are spending all of your income but not going over the budget. So you are getting the maximum satisfaction out of your money. So this has been the Grace Shaw channel, and if you have any questions, please hit me up and be sure to subscribe to my channel.